Morning, it's Harvey Jackson. Just going to go through some of the news items. One of the top one is the concessions that were made for uh, to the tariffs on autos was made yesterday. There's a lot of posturing around it. Here, the U.S. soy, corn, wheat all rise on the second day with the expectation that they might be able to put into this basket with concessions as well. Dairy imports from Germany is actually on the increase, and this is just more uh, weight on this market with the China just finding other alternatives to the U.S. Products that they buy on the egg side, because they're the largest buyer of egg products. You can see here, this is interesting part here is the amount of fentanyl. It's only 0.2%, and Secretary Rollins, she's trying to get a little bit more products added, all egg products, because there's some. You're going to see this a little bit later, but there's ethanol is part of what we buy as well. And there's some pressure on the economy, even on the latest data that's coming out of the U.S. on jobs and job numbers and stuff like that. Um, uh, this is just basically talking about what it could actually do. It's going to put some pressure on our economy, and you got premiers like Doug Ford and Daniel Smith putting some pressure on it. You'll see that in articles here as well. Um, this is just interesting because you start to think about what other retaliations are going to go. So you got Mexico is the top buyer of corn, and China is still the top buyer of soy. So there's a lot at risk if they start canceling orders that they haven't taken yet. And of course, Trump is going to posture that is you can't cancel orders or well whatever. They've been doing that their whole life. Um, just article talking about their change in policy and trying to encourage more growth and take on or some more increasing the just overall production and farmer growing more with technologies and storing more within their country because they don't want to be caught on this side of this trade stuff here. Uh, Susan Shroud, she just the red is Canada, and you can see how we've increased on the ethanol in the last few years. So we're one of the major buyers of U.S. made ethanol, which is pretty substantial. So the Canadian dollar has risen, and here I'm going to maybe just get into just a little bit about the forex. When we look at where a lot of the trade is done, and this posturing about this 25% tariff, euro is still a very strong buyer of U.S. products. And if you looked at the U.S. dollar index, it's actually weighted more to euro than it is in Canadian. And and it looks like well, we know that the euro has actually gained, just like the Canadian dollar has slightly gained off of its lows. Euro has actually rebounded basically, and that's putting pressure on the U.S. dollar. So it's actually fell apart a little wee bit. And yeah, so it's not only our commodity or our dollar that's impacting the U.S. This one has risen because of the weakness in the U.S. dollar a lot, and that's in turn actually kind of giving the a life raft for the Canadian dollar as well. Palm oil ends higher on concerns of wheat production. Here's some ice cover for the Great Lakes. I've been paying attention to this, and you see that it went above the long-term average, and now we're tracking down. I don't know if we're going to continue to track down, but you see it tracks down anyway in that direction. Well, you look at the actual ice cover, we're at 22.6%, and you can see the gray areas where the ice is, and of course we want to get way over here. And I've been kind of keeping track of tugboats, and there's been a few tugboats, or not tugboats, icebreakers, and there's been a few icebreakers up there, but they're all moored and shut off this early in the morning. But you've seen them actually making their way through the Great Lakes. And the reason I say that that's important is because the Great Lakes actually, for me over in the east in Manitoba, we need that shipping lane to open up as soon as possible, and that could maybe help us on our export program with wheat and our canola as well. Canola's up $3. Rapeseed is up a buck as well. Soy oil is slightly up as well, half a penny, and palm oil is up 62 ringgits. Crude oil just slightly up as well, and the wheats are just up a few pennies as well. The Canadian dollar's off a little wheat bit here today. So just looking at the canola, you can see it doesn't look like there's a big increase, but there is a bit of an increase there, and you can zoom in, and this is basically when the tariffs went on, and you can see how much we've fallen. And this is basically 2 days of a minute chart. So we've gotten back to a kind of median ramp or area, but we need it to pull back a little bit more for us to have any confidence in this trade war, and whether we're actually going to find other partners to sell this stuff to. Here's your new crop. The market has pulled up a little wee bit here, but the other thing to note, even on the previous chart too, is looks like we're in a bit of a buy signal potentially here with slow stochastics, and let's if we wanted to get into that, give me a call. Here's your rapeseed. It's pulled back quite a bit there as well, and it's right now about $142 more expensive than the Canadian canola priced in Canadian dollars. Your soybean oil has finally got a little bit of a green on the chart, and it's starting to look like there could be a buy signal on the soybean oil here as well. Palm oil, as stated, it's a bit of a green just based on some lower production numbers. Soybeans, a little bit of a recovery there as well. And the Canadian dollar looks like we're recovering, but and again, I would just put some caution because if we just take some of these highs and lows out, we're not making new highs if you just eliminate some of that other stuff. Canadian crude oil just continues to make lower lows here. So drill baby drill, whatever it might be that's causing some of this, other than and OPEC potentially opening up their supplies as well. Even though there's the tariffs on here, this is the Western Canadian Select price. You can see we're sitting right at the $54 a barrel, so about the $9 to $10 differential between the Western Select and the or Western Select and the West Texas. Let's just have a quick look at wheat. Looks like there's a little bit of a green on here, and this is the Minneapolis and the Minneapolis new crop. Still looking at trying to get to these targets up here. Now it seems pretty lofty at this point, but I would still expect that we can see that. Here's your Kansas. Like to get some of this rise in here as well, and we've hit some pretty low values that we've made back here as well. Your Kansas new crop didn't go quite as far as the old crop, and Chicago went farther, and it's just getting back to the values that we were at the lows that we previously made. So corn, and I left this line on here, so you've got looks like a bounce off, and we'll have to see if this continues to recover. And next week we do have a couple of reports. There's going to be the USDA crop production, and then the March 12th is going to be the StatsCan acreage intentions. Whether that's survey based, I think it is, but we'll have to see.